China says the economic growth targets for the year are within reach. Official data released on Friday show industrial production and retail spending both grew last month. Zheng Chunying has more from Beijing.
China's National Bureau of Statistics says industrial production improved in November, expanding 6.6% from a year earlier, up from a 2% increase in July.
In terms of sectors, the value added in mining increased by 3.9% year-on-year. Manufacturing went up by 6.7%. The production and supply of electricity, thermal power, gas and water grew by 9.9%.
Retail sales, a key metric for domestic consumption, rose by 10.1% in November year-on-year, up from the 7.6% growth in October. And the property sector faces a range of challenges, with real estate investment falling by 9.4% in the first 11 months compared with a year earlier. But officials say they're positive about the sector's outlook in the coming year.
With more support policies implemented, we have already witnessed signs of improvement in the property sector. Next, we will continue to expedite the development of a new real estate model, and we're confident the housing sector will be stabilized in the near future.
Officials also say imports and exports saw a 1.2% increase year-on-year in November, up by 0.3 percentage points compared to the previous month. And China continues to implement measures designed to improve the country's trade structure. Official data shows November saw fast growth in high-tech investment and employment remained generally stable. Officials also say that China's economy still faces some challenges, including insufficient demand, overcapacity in certain industries, as well as the complicated international political and economic situation. But they said that they're confident that these will be addressed through the implementation of more effective measures following the general principle of the Central Economic Work Conference held this week. Zheng Chunying, CGTN, Beijing.
For more insight into China's economy, we're joined now by John Gong, economics professor at the University of International Business and Economics in Beijing. Always good to have you on the program. John, break it down for us. What were the key takeaways for you in this latest data?
Well, I think, first of all, thank you very much for having me, Mike. It's always nice to see you. I think what's happening is that finally the economy is coming back. It has been actually coming back very slowly. I've been always saying that, let's just be patient. I give credit to the central government for not rushing to a massive stimulus package, right out of the COVID era, when we had some difficulties back in June and July. There are very clear indications that the economy is slowly coming back. The issue is that it's really the sort of the lower strata of the society. The people who are sort of really being hurt during the COVID era and are still looking for jobs back then, slowly don't have the money to spend, and now they're starting to have jobs and still have some income, and they're starting to spend. I think that's reflected in these statistics. So I think this is the beginning of probably a fairly extended recovery period. Although I would say the recovery is very slow. Another thing I want to point out is that this early stage of recovery is not so much driven by the external markets. I think China's export sector is still quite anemic. It's mostly driven by domestic consumption as well as investment. So I think that's a very good sign. That indicates that this recovery can be sustainable over quite a period of time.
John, you were talking about patience and kind of the slow recovery. As you look at the landscape out there, what areas are still suffering from the pandemic, would you say?
Well, compared to the same period last year, well, actually, I will also point out that, take the current statistics in November with a grain of salt, because last November, it's actually very bad. It was a very bad statistics at that time. So, some good statistics in this November should be taken more cautiously. Nevertheless, I would say there are still, fairly considerable set of areas that are still quite, problematic in my view. For example, the real estate property market, I would say that, it probably will never get back to the same level as we had in previously. It's just going to be, very anemic growth moving forward, if any growth at all. Other areas that would expect it to have some room for improvement certainly includes consumption. And I think in China we're getting to the Spring Festival season very quickly, and hopefully this Spring Festival will see some encouraging statistics on the consumption side. People, and I hope that this Spring Festival finally we get all the bad news behind us, and people will really open up their wallets and spend some serious money on consumption during this Spring Festival.
And John, you led me to my next question. I was going to ask about real estate. We heard in that report, that there's new policies afoot, a new real estate model. Is there anything the government can do to actually gin things up and improve the real estate market, or is it just one of these things we're going to have to wait and see?
Well, in my view, first of all, let me say that previously the governments, various local governments, have putting measures and policies that essentially restrict people from buying real estate properties who have already owned real estate properties. I mean, the measures in place at that time was intended to prevent speculative investment. And in my view, all of these measures should be gone a long time ago. And I think they're starting to take away these measures at various government levels, but I think the pace is still not quick enough, in my view, honestly. And I think the entire regulation on the consumption side in the real estate market should all be gone. I think real estate is still a for a lot of people, owning a real estate is still pretty good investment, especially for young people who are getting married, who got out of college, starting a new life in cities, particularly in first-tier cities. So I would say that there's still room for a little bit of a growth in these first-tier, second-tier cities. So I think the government should really adopt a sort of encouraging policy to take away all the measures that have been put in place in previous years and totally open the real estate market.
And John, let me ask you one final question, which of course is that all-important relationship between China and the United States. Of course, I was out in San Francisco for the meeting between Biden and Xi. And Janet Yellen's talking about coming back in 2024. Where do you see that relationship going, and how much of an impact is that going to be on the economy going forward in 2024, would you say?
Yeah, well, certainly I would say that summit meeting in San Francisco a few weeks ago was a landmark, a watershed event. It sets the change of direction, in my view, at least a little bit. I think all signs are indicating that the bilateral relationship between the two countries are coming back a little bit. And I think I'm starting to see that there are senators and congressmen in Washington are starting to talk about not totally decoupling. We still have to talk to China. There are still room for cooperation. So these kind of a rhetoric, in my view, are very encouraging to see. I think, after almost a few years of very harsh policies towards China on the part of the Biden administration, there are some soul-searching re-evaluation about the effectiveness of these policies and the consequences of these policies. So I think, there's some rethinking about this relationship. And my view is that Washington is starting to realize that without China's cooperation, without peaceful coexistence, mutual respect, it's not going to go anywhere. So that's a very good sign to see.
All right, John Gong joining us from Beijing. Always a pleasure. Have yourself a great weekend. Thanks again for your insights.
Thank you.